TFNN Breakout Investing with your host, Ken Shreve.
Hey, good afternoon, everyone. Welcome to another edition of Breakout Investing on TFNN. Hope you all had a great 3-day weekend, good long weekend. My name is Ken Shreve. Thanks, as always, for listening. Appreciate it very much. My show airs every Tuesday and Thursday for new listeners from 3 to 4 p.m. Eastern on TFNN. My show is also available as a podcast on iTunes if you can't listen live. And don't forget, you can listen to all TFNN programming on your smartphone. Just plug those earbuds in, type in tfnn.mobi in your smartphone browser, and you can get the stream 24/7 that way as well. On my radio program, I go over several charts on my show, and if you want to look at those charts right along with me, just tune in to Tiger TV, Channel 1, on the homepage of TFNN.com, and my show is archived every day on Channel 13. On Tiger TV. So that's it for the house cleaning items, except to say that today is Tuesday, and that means I published the latest update to my weekly newsletter, Ultimate Growth Stocks. And if you want a free 1-month trial to Ultimate Growth Stocks, you can get that right on the homepage of TFNN.com. Just click on the newsletters tab on the homepage, then click on investment newsletters, and you can read about Ultimate Growth Stocks and avail yourself of a 2-week trial that week. Okay, let's take a look at this market. We've been bleeding a little bit into the close here after early gains. Let me just refresh my chart of the Dow here, and we'll see the Dow Jones Industrials is up about 0.5%, call it 58 points to 12,423. Of course, we had a recent breakout for the Dow over a swing point of 12,284. That was its late October high over here, but the Dow right now trading in the bottom half of its trading range today, and near its session low. And let's move over and take a look at the NASDAQ Composite, see what that index is doing today. Should be an interesting week for tech stocks. Let's take a look at the composite here. That is up 16 points, 0.6% to 2726. It is trading at its session low right now. So with the NASDAQ 2753 is the next level for that index to conquer. And again, that's going to be the late October high over here, 2753 for the NASDAQ Composite. It's about 26 points away from that right now. And it really is going to depend, again, on what some of these high-tech bellwether names have to say on Thursday. Thursday is going to be a particularly busy day for earnings. All right, let's finally just take a look at the S&P 500 here. See what the benchmark index is doing. It is up about 2.5 points. It's the S&P 500, 0.2% to 1290. A couple of price levels the S&P 500 cleared. We had 1267 back in this area right here, and then just recently 1292. And the Standard & Poor's, it briefly climbed over that 1292 price level, and it is now slightly underneath it, 1291.55, basically sitting right at that swing point. Volume today, just not that impressive. I was really hoping, I still think there's a chance we could see some volume pick up in this market. Technical investors like myself, growth investors like myself that like to see volume certainly have been disappointed in recent months, as there still seems to be quite a bit of money on the sidelines. I do think there's a chance we'll see volume pick up this week. Of course, this Friday is options expiration, which typically results in heavier volume, but we could see even heavier volume before that, as it is a pretty high-profile week of earnings reports. Very busy this week, and even busier next week. So we will see. This market still strikes me as a wishy-washy market. It strikes me as a hesitant market. Certainly it has been a good start to 2012. I'm trying to stay as constructive as possible on this market, and when I look at my growth screens, certainly the action is a lot better than what it's been. Does it make me entirely bullish? No, it does not, because again, when you're a technical investor, when you're a growth investor, you have to see volume, because when you see low volume advances, it can ultimately pave the way for sellers to come in, and really they can have an easy time of it. If there's a weak market foundation that was built without volume, it can just make it easier for sellers to come in and gain the upper hand pretty quickly. Now again, it's going to depend on what some of these companies have to say. Earlier today, we had, let's see, Wells Fargo. Let's take a look at shares of Wells Fargo. They reported earnings before the open. Busy week of earnings from the financial space, and see shares of Wells Fargo up 20 cents to $29.81. It hit an intraday high of $30.69. So it's all the way at its session low now, trading near its lows for the day. Volume pretty heavy, but pretty ugly day, frankly, for Wells Fargo. The results weren't bad. Nothing mind blowing here. Earnings up 20%. Should say excluding items, up 20% to 73 cents a share. Sales down 6% to $22.1 billion. We can also take a look at Citigroup, which started earnings off in the financial sector earlier this week. Shares of Citigroup also not having a good day here, down $2.37, down 7.7% to $28.37. So coming up this week, we've got some other high-profile reports in the financial sector. Tomorrow, Goldman Sachs will be out. U.S. Bancorp, ticker USB, PNC Financial. On Thursday, Bank of America, Morgan Stanley, etc. So we'll get into some of those reports later in the show, but sort of a mixed performance. Not too bad a day for Wells Fargo. Pretty crummy day for Citigroup. The numbers at Citigroup, earnings also up 20% year over year to 48 cents a share. Sales down 7% to $22.9 billion. Mentioned volume in the market. It started off strong today on the New York Stock Exchange and the NASDAQ. It is now kind of just a wishy-washy day. Not a whole lot of volume. On Friday on the New York Stock Exchange, we had about 825 million shares trade hands. That's about average for the New York Stock Exchange. Today, looks like we're going to come in pretty darn close to that level at last check. Volume a little bit higher on the NASDAQ today, but not by much. On Friday, volume on the NASDAQ was just over 1.6 billion shares. That's also about average these days, so we could come in maybe 5 to 10% higher than that today on the NASDAQ. But certainly right now the market's inability to hold on to its early strong gains, not entirely surprising, because again, there's just not wasn't a big volume push behind the gains today. Some other stocks that reported earnings before the open. Let's take a look at Checkpoint Software Technologies. This is a real steady Eddie. Consistent grower, not seeing growth of 30-40% from this software company, but they just deliver steady growth quarter after quarter. It does trade wildly, I gotta say. I mean, if you look at the daily chart for Checkpoint, you can see stocks having a good day today, up $3.16. A little better than 6% to 54.06, trading in the upper half of its trading range. But it does kind of trade wildly, and that's typically not my cup of tea. Anytime I buy a stock, I kind of want to have a good understanding of its trading personality, and I generally speaking, with everything else being equal, I tend to avoid stocks that show a propensity to swing wildly during the day, and Checkpoint certainly shows that. The numbers for Checkpoint, pretty decent. Earnings up 15% from a year ago to 84 cents a share. Sales up 12% year over year to 356.8 million. So pretty decent numbers from Checkpoint Software Technologies. Taking a look at crude oil today, up 2% to $100.71 a barrel. We'll take a look at the USO, which I typically like to do. The United States Oil Fund, which basically tracks the price of West Texas light sweet crude oil. It is trading up near its session high today, up 58 cents, 1.5% to 38.74. As you can see, firming up at its 50-day moving average, so its technical picture is still very much intact. And let's see, just check getting my machines all set here. Just bear with me. Want to go to Arlington, Texas, and take a call from Dominic. Dominic, how you doing today?
Yeah, greetings, Ken. I wanted to know your thoughts on Visa and Kors, Michael Kors, which is similar to the Coach bags.
Yes, Michael Kors, the recent new issue. I believe they came public not too long ago, right?
Yes, correct.
Yeah. Okay. Well, let me just pull up. Let's pull up a chart for Visa here. This is, another stock. It was MasterCard that got hit with a downgrade recently from Goldman Sachs. Visa's technical picture continues to look pretty decent. Looking at a chart of Visa right now, it is up 1.6% today to 102.36. If you look at a weekly chart for Visa, Dominic, it showed pretty bullish action just a few weeks ago. It started to flash a series of what we call tight weekly closes, where each close was within 1% of the prior close, and it actually did that. Let me just it was more than a few weeks ago. It was 1, 2, 3, 4, 5, 6, 7, about 6, 7, 8 weeks ago. It just moved sideways, and then it presented a buy point right around that $98 price level. So at 102, it's probably not quite extended yet, even though it has been running higher. It's not. You could start a small position up here. I'd be a little hesitant about that, but the rule I learned at Investors Business Daily is not to chase a stock when it moves more than 5% past a swing point. So if you call the swing point of $98 on Visa, and it's at 102 now, it's probably still within that 5% range. That said, Dominic, I'm a little uncertain on the market. The market action is still, I'm just not sure it's as healthy as some might be led to believe. So with Visa, the 3 weeks tight that I'm talking about, now that I have a chart up here, that was in early December, the week of December 2nd, December 9th, and December 16th. It closed tight for 3 straight weeks. It broke out over that 98.50 price level. So bottom line with Visa, it's still technically healthy. Good fundamentals, a lot of good qualities. The best time to buy a growth stock is when it's coming out of a base. Sometimes these 3-week tight patterns can be good add-on opportunities. IBD will say it's okay to buy a stock for the first time. If you do out of a 3 weeks tight pattern, you probably just want to start with a slightly smaller position. So that's it with, and then I'll tell you what, Dominic, I'll get to Kors. I'll let you go here, and we'll talk about Michael Kors when we get back from the break, okay? Unless you want to hold on the line?
I'll hold for you, Ken.
Okay, thanks, Dominic. All right, folks, we're going to talk about Michael Kors' recent IPO with Dominic in Arlington, Texas. We'll do that when we come back. You're listening to Breakout Investing on TFNN.
Here's what people are saying about Tiger TV.
Let's go to John in Tampa. Hey, John, what's going on?
Hi, Tom. How are you, sir?
I'm doing great. You having a good day out there?
A wonderful day. I love your Tiger TV. I watch it every day. I'm like a kid in a candy store.
Oh, man, I appreciate you out there watching it. How long have you been watching the Tiger TV?
I'm watching almost a month now, and it's just wonderful.
It's pretty cool, isn't it?
Oh, yes, it's cool. You see the charts and everything. Thanks so much for the hard work.
Tiger TV, a great news service from TFNN.com. TFNN is proud to bring you the cutting edge of investment newsletters. Ken Shreve's Ultimate Growth Stocks. Ken is a top-down investor who lets price and volume in the major stock indices tell him when to be in the market and when to be out. By using his unique blend of fundamental and technical analysis, Ken will protect your hard-earned capital while realizing breakout gains. Go to TFNN.com today, click Investment Newsletters, and get Ken Shreve's Ultimate Growth Stocks free for 2 weeks.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective and maximize your returns. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
In 1929, Joe Kennedy had $4 million. By 1932, he grew it into $180 million. All this during the Great Depression. The good thing about economic difficult times is that the worst economy can produce the best rewards in the shortest period of time. In fact, during the last 130 years, 61% of that time has been spent in recession. How would you like the strategies that are bulletproof against the turmoil of our economy in these fast-changing times? For the last quarter of a century, I've studied and used the secrets used by millionaires and billionaires. These are bulletproof strategies that will absolutely astonish you. I'd love to introduce you to these concepts that will absolutely change your life. You'll learn the 3 ways to grow any business exponentially. I'm Steve Rhodes, co-host of the Money Masters with Tom O'Brien and host of the Trader's Edge, both seen daily at TFNN.com. If you're even a little bit interested in accumulating wealth, providing a better life for you and your family, then go to TFNN.com, look under Breaking News, and click on the Get Steve Rhodes Special Report link, and I'll email you this free report, Pathways to Wealth.
Would you like to discover the next great tech stock? David White, TFNN's technology guru, has just launched his new newsletter, The Technology Insider. In his newsletter, David will be looking for those shining stars that may turn into the next Apple, Microsoft, or Cisco. David combines his technology background as a software programmer with his market skills as a successful professional trader to give you this unique newsletter. We're on the verge of the next great tech run. With the Technology Insider, you'll be in front of the run-up and not lagging behind. David is developing a long-term investment portfolio, therefore we're only offering the Technology Insider as an annual subscription with a remarkable price of only $395. That's right, for a little over $1 a day, you'll receive the fundamental technology wisdom and technical trading skills of the Technology Insider David White. What are you waiting for? Go to the front of TFNN.com, click on the link on the front page, sign up for your 2-week free trial, and become a Technology Insider today.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
Welcome back, everyone, to Breakout Investing. I want to thank Dominic from Arlington, Texas, for holding on over the break. And next stock that Dominic wanted to talk about was Michael Kors. This is an apparel maker, luxury apparel, accessories, footwear under the Michael Kors brand. Big move for the stock today, no doubt. Stock is up about 6.6%, $1.75 to $28.31. Dominic, this stock is more compelling to me than Visa at this point. So certainly it's speculative. It came public just not that long ago. What was it, last month? In mid-December. It came public around $20 a share. Now it's trading around $28.31. What you have here is a heavy volume breakout over a swing point of $27.58. So for technical investors, you've got volume, you've got to move over a swing point, and at $28.31, it's not that far extended over that $27.58 swing point. So I'm lukewarm on Visa here, because I think if you going back and looking at Visa's chart, probably the ideal time to buy that stock was when it broke out over $95, $96 a share. A few weeks later, it started to show some tight weekly closes. You had another breakout over 98. Now it's up around 102. I'd be more inclined to wait and see if you can get a pullback with Visa. But Michael Kors, recent new issue, good bottom line and top line growth in recent quarters, certainly has a lot of things going for it. It's not a cheap stock. It's a fairly high multiple stock, but there does seem to be a pretty good growth story going on here as well. So more keen on Michael Kors than I am Visa at this point.
Hey, Ken, you brought up a really good point with regard to the volume bars. I saw what you when you brought up the chart. on the website with the volume bar showing accumulation. With regard to Michael Kors, well, before I get to that, you mentioned something else when you were reviewing Visa. You said you were concerned with respect to the market. What are your three primary concerns with the way the market is acting? Obviously, we're having a reversal day today, but what else, I guess, concerns you? Because we do have a lot of short interest in the market.
Well, okay, so basically with the market, I mentioned since the start of the year, we're a little more than 2 weeks into 2012, and I look at volume in the market, and what I see as a market sort of wedging higher here, I see a market rising without a lot of conviction. I'm seeing some growth names out there showing signs of strength. A Panera Bread is starting to show signs of life. But overall, I'm still, Dominic, when I'm looking through my screens, if we're in the early stages of a meaningful rally, it shouldn't be as hard as it is right now to really find emerging leadership. There's some of it out there, but, for every 50 charts I'm looking at, I'm pulling maybe one or two stocks that look somewhat, compelling in terms of the parameters I use. So what I see is a market that I see retail investors involved in this market since the start of the year, and I still don't see a lot of institutional involvement. And the one thing I learned in the 12 years at Investors Business Daily, that market rallies, if they're really going to work in earnest, you need to see conviction behind the buying. You need to see the institutions out there kind of establishing the new leadership. And frankly, we're at the early stages of earnings season. I would like to believe that names like Google and Microsoft and IBM later this week are going to say nothing but good things about earnings, but I really can't say that right now. I think it's 50-50. And how the market reacts to these earnings reports, I think it's too much of a coin flip right now, which is why I'm still, I'm trying to play offense and I'm playing defense at the same time. There's just something about this market that isn't quite right.
I got you, Ken. Well, thank you so much for your analysis.
Okay, thank you, Dominic. Always appreciate the call. Thanks a lot.
Bye-bye.
So and it's not to say that there are stocks working out there. There's no question about it. There are stocks working, and I have, I think, 6 stocks in my model portfolio right now, and I've got some winners in there, and but I'm also ready for the possibility that the market might not react kindly to what it hears from some of these tech companies. I think that we'll see strong bottom line and top line growth from a lot of companies, but again, how the market reacts is critical. This week and next week, I expect volume to pick up in the market. I hope to see some early signs of institutional buying. We could see some institutional selling. So we'll have to see. We'll have to see how things play out. All right, folks. When we come back, we'll take a look at some movers today. Some stocks acting well. We'll do that when we come back. You're listening to Breakout Investing on TFNN.
Attention business owners, managers, and entrepreneurs. Studies show that 1 in 25 businesses last 10 years, and less than 1% of all businesses generate $5 million in annual revenues. Would you like to learn the skills that separate these businesses from all of the rest? It isn't about working 10 times harder. It's about working 10 times smarter. And I can show you how. Absolutely free, no strings attached. I'm Steve Rhodes, co-host of The Money Masters with Tom O'Brien, seen daily at TFNN.com, past owner of businesses at Disney, Universal Studios, Vegas casinos, and top destinations throughout the world. Join me Wednesday, January 25th at 6:30 p.m. for a 1-hour online webinar where I'll teach you how to get your dream clients, get past the one person that stands between you and the most influential people in the world, and show you the 3 ways to grow your business exponentially. Go to the front page of TFNN.com under Breaking News and click on Pathways to Growth, where preparation meets opportunity. That's Wednesday, January 25th. Register now for your Pathway to Growth, part of our Go Long America program on the homepage of TFNN.com. Decisions shape your destiny. Shape yours now.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes a carefully selected portfolio can lower your volatility and increase investment return potential. Find out about what asset allocation and a Morgan Stanley Smith Barney financial advisor can do for you. Call Angelo O'Brien, financial advisor and certified financial planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney LLC. Member SIPC.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
This segment is brought to you by Direction Shares. To learn more about tactical tools for the sophisticated active investor, hit the Direction Shares banner on the front page of TFNN.com.
To Breakout Investing. Last segment talking to Dominic in Arlington. He asked me, what indicators am I looking at that are sort of giving me reason for pause about this market? And as I've been writing in recent weeks in my newsletter and at the street and over at realmoney.com that the light volume in this market is not what you want to see when a market is going higher. You don't want to see a lack of conviction behind the buying. It just makes for a generally weak foundation. The other issue that this market is dealing with, and something that we've been talking about on the show, is this strong dollar, weak euro correlation. Let's take a look at the Power Shares Deutsche Bank US Dollar Index Bullish Fund. One reason the stocks have weakened late, we're still in positive territory, but the dollar is trading up near its session high. It's still, the UUP is still down 7 cents to 22.68. But let me just go ahead and pull up a chart here that shows the 20-day moving average. The UUP, which is comprised of a bunch of long U.S. dollar contracts, it is still holding above its 20-day moving average. Okay, so support for the UUP is at the first support level, 20-day moving average at 22.52. Then you've got additional support at the 50-day line, which is 22.26. So the UUP right now at 22.68. is not showing meaningful signs yet that it's ready to break down. And frankly, the market likes a weak dollar. So until the U.S. dollar index, the UUP, both the charts look pretty much identical at this point. Until they start to show meaningful signs that they're about to break down, they start violating support levels. It's tough to fully go outright bullish on this market. That said, the market is in an uptrend. I have been putting money to work for my Ultimate Growth Stocks model portfolio, and I do have something to show for it. But it's not easy right now making new buys with conviction. That is a fact, and I wish that were different. But until I start to see meaningful signs of institutional buying in this market, it doesn't make sense to go fully 100% on offense here. I mentioned oil prices today up 2% to $100.71 a barrel. There was an acquisition announced earlier today. Let's take a look at PVX. This stock is up sharply today. It's up about 22% to $11.33. Provident Energy is PVX on the New York Stock Exchange, involved in the storage, transportation of natural gas liquids. Up big today on news. It'll be acquired by Pembina Pipeline. PPL is the ticker there for about $3.1 billion. Some oil and gas exploration and production names that look interesting here amid higher oil prices. Let's take a look at Pioneer Natural Resources. It's up 1.3% today to $98.92. PXD. This is another example of sort of a lackluster breakout taking shape here. It's trying to break out with conviction, but it's not really doing it. Volume is pretty light in the stock today. Had a recent breakout over 97.10. That would be its intraday high over here, but at 98.92 really is not making meaningful headway. Let's also take a look at Concho Resources, another E&P firm. It is trading, up 87 cents today. That's about 0.9% to $100.56. It is still trying to break out over a swing point of 105.66. It's still about 5 points away from there. But good fundamentals, very strong fundamentals at both Pioneer Natural Resources and Concho Resources. Again, Pioneer PXD just recently broke out, kind of a sluggish breakout, and CXO is still working on a base. Can't rule out a breakout here over 105.66. Economic data earlier today, quickly. Empire Manufacturing. Manufacturing activity in the New York area expanded at the fastest rate in 9 months. This is for January. So according to the New York Federal Reserve Bank, the bank's Empire State Manufacturing Index rose to 13.5 in January from a revised 8.2 in December. More good manufacturing data. The estimate was for a reading of 10, so that came in well above expectations. And investors also were cheered early on. News that China's economy expanded in the fourth quarter at the slowest pace since the middle of 2009. But listen, China's economy is still growing at 8.9%, which is quite good. Some economists, some analysts are expecting further easing in monetary policy when it comes to China in coming months. China's economic growth for the full year was 9.2%, down from 10.4% growth in 2010. Some China ETFs coming to life here. I don't look at ETFs that much on the show, but let's take a look at the iShares FTSE China 25 Index Fund. It is near session lows today, so early enthusiasm fading here. It's still up 78 cents, 2% to 37.53. You can see the 200-day moving average for the FXI is still probably going to be a pretty formidable resistance level at 38.66, but shares of XFI have started to come back to life. It did gap up today, but it is trading near its session low. And let's also take a look at the Spider S&P China ETF. That's ticker GXC. GXC, the Spider S&P China ETF. That is up 1.5% today to 66.82. Still trading underneath its 200-day moving average as well at 69.86. So About 3 points to go before it gets to its 200-day moving average. So still some technical work to do here to fix itself. But China ETFs generally doing pretty well today on news of 8.9% GDP growth in China. All right, let's take a look at MNST, formerly known as Hansen Natural. Now, company changed its name to Monster Beverage. This stock is outperforming nicely today. Boy, just a stock that does not want to go down, up $3.56, 3.7% to $100.55. Last week, Monster announced a 2-for-1 stock split effective February 15th. So I got to tell you, fundamentally, there's not, you can't really find many blemishes with Monster Beverage in terms of bottom line growth, top line growth, return on equity, profit margin, all the fundamental metrics I like to look at. But when you swing over and look at a weekly chart for Monster, I think it's still under Hansen here. Yeah, there it is. I still maintain that the big money has already been made in this stock. So we'll see. It is breaking out today. At last check, volume was pretty darn good. But when you see a price run of the magnitude of Monster Beverage over the past 2 to 3 years, it does give reason for pause. I don't think it's very tough to look somebody in the eye and say that this stock is a buy right now. Even though it's breaking out in heavy volume, it is a breakout from a late stage base, which should generally be avoided. This will be a case if Monster continues to head higher from here. I'm perfectly happy to let the stock go up without me. If this market is going to strengthen, there will be plenty of other buying opportunities to be had, but I generally avoid late-stage bases, and that's what you have with Monster. Another strong performer today. Let's take a look at Whole Foods Market, ticker WFM on the New York Stock Exchange. Good, solid breakout here. Okay, this is what's good going on in this market right now today. There's really nothing. I can't say anything negative about Whole Foods Market. Stock is up 3.8% today to 76.49. You had a good breakout over 74.45. Let's switch over and take a look at a weekly chart for Whole Foods. Let's see here. Where do we go? Whole Foods, there it is. Okay. So nice breakout for Whole Foods today, over 74.45. Again, when you look at the price run it's made, this is arguably another late-stage base. Okay, so you want to be wary of late-stage bases when you see a breakout from a late stage. Sometimes breakout from late stage bases can be prone to failure, but Whole Foods operates natural and organic supermarkets. Earnings due February 8th. Earnings are expected to be up 18% to 60 cents a share, with sales up 13% to about $3.4 billion. Pricey stock here, selling at 40 times trailing earnings, 30 times forward earnings, but outstanding price action today for Whole Foods Market. So move on, take a look at Apple. Apple at one point was doing well. It is trading in the middle half of its range today, not doing too badly, still up 1% to $424.41. Another kind of hesitant stock here, stock that is going to be coming out with earnings around January 24th. I don't think there's been an official earnings date yet, but profit expected to be up 55% to $9.94 a share. Sales up 44% to $38.5 billion. Trying to break out here over this 426, 427 area. 427 right here. It's a recent high of 426. Back over in this area here, but still, a breakout that could work. This is another example of a stock that just has been moving higher forever in light volume. Hard to trust moves in light volume, whether it's a stock or the general market. That's the bottom line. Stock, a large cap tech name, the QQQ component. Microsoft continues to act pretty well, but look at the reversal today. Stock hit an intraday high of 28.65. It is now down 2 cents to 28.23, trading near its low for the day. Maybe some apprehension ahead of earnings on Thursday, it is expected to report profit of 76 cents a share, down 1% from a year ago, with sales up 5% to $20.9 billion. So not great price action for Microsoft today. It looks like this volume is probably going to come in a little higher than Friday's session, but so far a reversal today after early strength. And again, when I was going over the major averages earlier in the show, went over the Dow, S&P 500, and NASDAQ. I didn't look at the QQQ, but let's take a look at the QQQ here, because Microsoft is certainly a heavy-weighted component in this index. The QQQ is interesting because it's fairly close to a breakout point here of 59.20. That, again, is going to be its late October high. The QQQ right now is at 58.66. Whether or not the QQQ breaks out from here is really going to be predicated on what these NASDAQ 100 components have to say on Thursday. So we talked about Microsoft. Intuitive Surgical is coming out Thursday. You also have Intel, Google, so a lot of NASDAQ 100 components coming up with earnings this week, and we'll see if it's going to be enough to help the QQQ. Taking a look at a chart of Intuitive Surgical, the stock continues to trade pretty well. There's no doubt about it. Shares of Intuitive Surgical up 1% today to 464.32. Volume dry up. Really not seeing meaningful signs of accumulation in Intuitive Surgical, but wouldn't be surprised to see a strong quarter from this company when it reports on Thursday. Very risky, obviously, buying a stock like this so close to earnings. Going to be a lot of people. They're going to take a flyer, say, hey, I think it's going to be a good quarter. How the stock reacts is really tough to say at this point. But Intuitive Surgical is... let me pull up a chart here because I have a different chart for Intuitive Surgical. Let's see here. Intuitive Surgical. This is a chart that plots the 20-day moving average and the 50-day moving average. So see ISRG, recent bounce off the 20-day line. Earnings growth, not spectacular, only up 10%. From a year ago to $3.33 a share. Sales are expected to rise 24% to almost $484 million. So ISRG makes that Da Vinci robotic surgical system very expensive, about $1 million price tag for the Da Vinci system, but doctors use the system for a lot of prostate surgery, minimally invasive surgeries. So all right, let's move on here as we're getting close to our next break. Let's take a look at Chicago Bridge and Iron. This is another name on my radar that I am watching here. Good technical setup taking shape here. It will work if we get a heavy volume breakout. Now, I'm just not convinced it's gonna happen. It could, but I'm gonna wait for volume to come into this stock. Wait for a breakout over 41.92. That would be its high right over here. Chicago Bridge and Iron basically provides engineering and construction services primarily to energy and natural resource industries. Gonna again watch this one for a breakout over 41.92. Okay, that's a Chicago Bridge and Iron. Possible breakout taking shape, and we'll see what happens there. All right, folks, stick with us. We come back from our next break. I'll take a look at one other good setup that's taking shape in this market, and then we'll go over some of these economic data and earnings reports due later in the week. You're listening to Breakout Investing on TFNN. We'll be right back.
Hi, folks. This is Tom O'Brien. If you want to get great trade setups in equity as well as the option market, come over to TFNN.com and test drive my daily newsletter, Market Insights, for 2 weeks absolutely free. Each trade setup comes with a profit projection as well as stop placement. Included in Market Insights is a Twitter alert service. This allows you to take advantage of intraday setups. Volatility is back in the markets. What does that mean to you? To me, it spells short-term opportunity each and every day. The days of trending up on lighter volume are gone. We have come off the highs with volume across the globe. Don't get caught in a complacency trap. Many of the indices have given back 2 months of trading in 1 week. We have a trader's market. You can take advantage of this traders market by test driving my daily newsletter, Market Insights, free for 2 weeks. Market Insights will give you the edge you're looking for in the markets. Go to TFNN.com under newsletter. Hit the Market Insight tab for your 2-week free test drive right here, right now.
TFNN is proud to bring you the cutting edge of investment newsletters. Ken Shreve's Ultimate Growth Stocks. Ken is a top-down investor who lets price and volume in the major stock indices tell him when to be in the market and when to be out. By using his unique blend of fundamental and technical analysis, Ken will protect your hard-earned capital while realizing Breakout's gains. Go to TFNN.com today, click Investment Newsletters, and get Ken Shreve's Ultimate Growth Stocks free for 2 weeks.
At Tiger Metal Exchange, we pay you more for converting your jewelry to cash.
Let's go to Brian in New Jersey. Hey, Brian, what's going on?
Hey, Tom, just want to let you know I did give you some jewelry. My jeweler offered me about $650, but you get a check in the mail tomorrow for about $1,200.
At Tiger Metal Exchange, it's all about honesty when converting your jewelry to cash.
Okay, let's go to Paul in Florida first. Hey, Paul, what's going on?
I want to commend you on the Tiger Metal Exchange. I just did a deal with you guys the other day.
Oh, good.
I'm very happy.
Well, I appreciate it. Now, Did you sell us jewelry or did you buy coins off us?
Yeah, I sold you jewelry.
Okay.
Yeah.
Awesome.
What we weighted at was less than you guys said, so, you're totally honest.
At Tiger Metal Exchange, we give you the tools to value your gold, and it's absolutely free. Call 866-618-8888 or log on to TigerMetalExchange.com. We've created the easiest, safest, and most honest cash for gold process. Tiger Metal Exchange. It's the only call you need to make.
Put the power of the Chapman Wave methodology to work for you. No matter what market you trade, what time frame you trade in, or your trading style, the opening call, Basil Chapman's daily market newsletter, is bursting with the information and trades you need to become a more successful trader.
I've been using Basil Chapman's Chapman Wave methodology for several years now. His Chapman Wave can be used for any time period for not only equities, but futures, currencies, commodities. I've been also a subscriber of his opening call, which I find an invaluable tool to help me analyze the potential of the market each day. He gives you opportunities to go short and long. It includes recommendations on stocks. I strongly recommend people using the Chapman Wave, and I very, very strongly support the use of his opening call.
To find out more about Basil Chapman and his Chapman Wave methodology, and to get your 2-week free trial of the opening call, a $64 value, visit TFNN.com today.
Here's what people are saying about Tiger TV.
Let's go to John in Tampa. Hey, John, what's going on?
Hi, Tom. How are you, sir?
I'm doing great. You having a good day out there?
A wonderful day. I love your Tiger TV. I watch it every day. I'm like a kid in a candy store.
Oh, man, I appreciate you out there watching it. How long have you been watching the Tiger TV?
I'm watching almost a month now, and it's wonderful.
It's pretty cool, isn't it?
Oh, yes, it's cool. You see the charts and everything. Thanks so much for the hard work.
Tiger TV, a great news service from TFNN.com. Catch Tom O'Brien, founder and CEO of TFNN, professional trader and educator. Also a special guest on CNBC, analyzing the commodity markets. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
Welcome back, everyone, to Breakout Investing as we start the final segment of today's show. Thanks very much for tuning in, and again, my show airs every Tuesday and Thursday on TFNN from 3 to 4 p.m. Eastern, and boy, I rarely give out my Twitter address on my show, but I'll do it right now. It's at Ken Shreve, at Ken Shreve on Twitter, where you can get some additional thoughts from me on the market and other fun stuff. So let's go ahead and take a look at the Dow, see where we're at here with about 5 minutes left to go. In Tuesday's session, the Dow Jones Industrials right now holding on to gains, trading in the bottom half of its range right now, up 58 points to 12,423. Moving on, take a look at the S&P 500. And that is up now 4 points, 0.3% to 1290, trading in the bottom half of its range as well. And finally, the NASDAQ Composite. NASDAQ Composite trading up 15 points, about 0.5% to 27.25. So is the market acting poorly? No, it's not acting poorly. The trend is upward. We have indices like the composite S&P 500, the NASDAQ 100, all vying for breakouts. What's really going to help these indices if we just get a little bit more volume coming into this market. The fact that we have not seen it yet gives me reason for pause. I don't want to beat a dead horse on that topic, but it does. It has me, again, playing offense and defense. I feel like I should be putting money to work in this market environment. I have been. I have stuff working, but typically low volume advances, whether it's a stock or an index, should be taken with a grain of salt. It just can't stress it enough. Low volume gains make for a weak foundation and make it very easy for big sellers to come in and do their thing. So if we can get some institutional buying going on in this market when heavy volume selling comes in, if that's coming in a market where it's been rising in heavy volume, it's just not as easy for the market to go down. When you have a weak foundation, it's just easier for the market to go down. All right, let's take a look at another name I'm watching here, Intuit. INTU on the NASDAQ. Not a super fast grower here, but a stock that's in a pretty decent technical setup, showing relative price strength. Shares of Intuit up 36 cents today. Another stock that is trading well off its session high. Intuit up 36 cents to 55.19. This is a stock with a swing point of 55.43. 55.43, that's going to be its high from several weeks ago. And Intuit, of course, known for its TurboTax QuickBooks software, personal financial management tools, and just a good steady grower, good clean balance sheet, and pretty good technical setup here. If a new round of institutional money comes into this market, wouldn't be surprised to see Intuit outperform. And finally, let's take a look at ADS. This is another tricky one here. Alliance Data System. It is another stock that kind of trades wildly, tends to have high intraday highs and lows, big trading ranges. Stock is up 2.2% today to 108.38. It's a provider of transaction, credit, and marketing services to retail companies. I'm cautious of the stock up here. It never really had a good solid base breakout, but shares of Alliance Data Systems also acting well today, up 2.2% to 103.07. All right, folks, thanks very much for listening. Coming up next, the Tom O'Brien Show from 4 to 6 p.m. Eastern on TFNN. Hope you have a great afternoon, and tune back in to my show next Thursday. Here.